We're discussing the article, Trying Not to Lose Ground, State and Local Government Advocacy During the Passage of the 2017 Tax Cuts and Jobs Act. This article was for the annual edition of the Annual Review of Federalism for Publius, the Journal of Federalism, which is done every year, trying to examine the most important issues related to American federalism. I, given my special expertise, I guess, in intergovernmental lobbying, I was asked to write this. So we're going to take a look at what this means more in the context of how groups, in this specific instance, state and local governments, either elected officials or appointed officials, attempt to influence the federal government. But it's also a good case study of federalism as well for us, because we see the ways that the federal government affects state and local governments by the policies that they pass. And these may be intentional or unintentional, but whatever the federal government does has profound effects on something, on the state and local governments, particularly something as complex as the tax code. Every time that's changed for a number of reasons that we'll talk about, it affects the state and local governments profoundly. So just to start, this was kind of the key achievement, really, of the first part of the Trump administration's policies. So it was passed in late 2017. It had the Tax Reform Act was essentially the keynote of what President Trump had tried to do over the course of his first couple of years, his first year in office. And this was the first time since 1986 that we actually had any type of comprehensive tax reform. It's very difficult to get tax reform passed because every special interest over time tries to get their own individual tax advantage written into law. So when it comes time to redo the tax system, what happens is essentially you've got to strip all the special interests of those things that are important to them, in effect trying to create a more streamlined tax system that benefits the entire economy and all of its citizens. But you're really running up against the power of interest groups and special interests, which is what makes this such a difficult thing to be able to do effectively. And hence the fact that even though we've been talking about this for the last 10 to 15 years, it was not, 1986 was the last time it was done. So we're looking at a fairly long period of time here. So the question is really, what did the Tax Cuts and Jobs Act in 2017 accomplish? It essentially cut taxes by $1.46 trillion over the course of 10 years. And it did a couple of important things as far as the Trump administration and Republicans were concerned. One was it cut taxes, cut the top rate from 39.6% to 37%. And it also kind of eliminated the amount of people that would pay no federal income taxes, increased that from 44% to 47.5%. Now, in saying that, just want to qualify the fact that that doesn't mean that those people pay no taxes, period. They just don't pay income taxes. So most of those people are also subject to what we would call payroll taxes, which include things like Social Security and Medicare. So they are still paying taxes, just not on income. And then in addition to that, it did streamline the income tax, federal income tax for many Americans, particularly from the upper middle class on down, but by pretty much doubling the standard deduction that people can take. For individuals, that would be $12,000, and for couples, that would be $24,000. So many people, don't have enough write-offs to be able to reach those thresholds. So it really simplified the tax code for a great number of Americans. In addition to that, it was also billed as a tax cut for businesses. So it cut business taxes by about $1 trillion and reduced the corporate income tax rate from 35% to 21%. So again, all of these tax cuts were paid for in many respects by kind of streamlining some of the tax code and getting rid of some of the deductions, although there was still a fairly high amount of this tax cut that was paid for by deficits. but it really kind of accomplished what both the Trump administration and most Republicans wanted to do. So from the perspective of the overall tax reform, that's what we see. Now, in looking at this, I just want to step back for a couple of seconds and talk about how this actually affected state governments from a macro point of view. One of the things is that the effects on state and local governments is that this really kind of decreased income to the federal government by $1.46 trillion over the course of 10 years. Now, you'd ask yourself, well, why does that really affect state and local governments? Well, the problem is then that we get into more deficit financing of the federal budget, and as a consequence of that, might see cuts to programs that are very important to state and local governments. And one of the ways in which Republicans were talking about paying for some of these tax cuts was to dial back the amount of money that was going to be spent on Medicaid. And Medicaid is one of the largest expenditures for state governments and also important for local governments. So state and local governments were worried at the outset here, particularly those that were run by Democrats, were worried about the effect that deficit politics would have on revenue sharing between the state and the local governments and the amount of money that they'd be getting. The second big way that tax reform affects state and local governments is in the idea of what we would call tax conformity. Most state governments link their tax code to the federal code. It just makes things easier. So when you get done on April 15th, if you're a procrastinator like me and wait to do your taxes until the last day, you get done with your federal taxes and then you have to do your state taxes. Mostly what happens is the same tax code and the amount of money that you make rolls over from your federal tax form onto your state tax form in the form of your gross adjusted income. And it's just easier for states basically to use all of the tax code from the federal government so that you don't have to sit and rewrite entire forms over again. Now, the problem for the states was a number of them have different ways that they have tax conformity, which we don't really need to get into. But the problem was that tax reform was passed in December of 2017. And the big problem for state governments was they didn't really have time to be able to adapt their tax system for the 2018 fiscal tax year as a consequence of the new tax reform bill. So the federal government really kind of blindsided them. They had asked during the course of the discussions for the tax cut that basically the federal government give them about a year or so to be able to conform to the tax code, but that went unheard of for the state governments. So for the most part, the states have adapted to that. It hasn't turned into quite as bad of a problem as it might have otherwise been. So two things that are really kind of big in the aggregate. One is deficit spending. Two, the idea of tax conformity. Now, how do we, this is kind of a case study of how state and local governments, through either interest groups, from elected officials or from officials that are appointed, attempted to be able to inform the debate about tax reform. It was a very comprehensive study that I did in order to be able to find out who was involved. I took a look at a number of sources of data, and I just provide these here because it helps understand the methodology behind this. So there were no actual legislative hearings associated with the Tax Reform Act of 2017. However, there had been legislative hearings about tax reform going back to 2013. So I took a look at all those legislative hearings and pulled out all the testimony that was done by state or local officials on behalf of various organizations. The second thing I did was take a look at the municipal yearbook. There's a section on professional special assistance and education organizations serving state and local governments. Took a look at all those organizations, went to the websites of those organizations and attempted to see whether or not they had done any advocacy on behalf of the tax reform. Second is the State Service Organization is part of the Hall of the States, which is where The National Governors Association is located in Washington, D.C. Took a look at their website, tried to identify organizations there. And then also, as I went through, I found a number of different coalitions that were set up to influence discussion on tax reform, and went to those membership lists and also pulled names of organizations off that to see if what they were involved in. So how did I actually find the agendas of these different organizations? Well, one was I went to the actual group websites. The second is that the United States Finance Committee had a number of different working groups in relationship to federal tax reform, and they had asked for comments from the public. I went to those comments and pulled out things that were related to state and local governments. Also took a look at state and local news sources, including things like Governing Magazine and also Pew Center for the States. And then finally just did other web research in general. So that's how I found the groups that were involved with this and also the agendas that were associated with it. I do want to mention one thing as we talk here. The literature on intergovernmental lobby talks a lot about how intergovernmental lobbying organizations and how state and local government officials influence the federal government. And if you take a look at the literature over time, there are four major kind of themes that emerge as to how state and local governments influence the federal government. One is by presenting a united front. If state and local officials together can go to the federal government and say, we are completely against this public policy because we believe that it will have a negative effect not only on state and local governments, but the country as the whole, they have a lot more influence with the federal government because state and local officials are primarily involved with implementing many of federal programs. So if they present a united front, everybody says the same thing, then it's worth listening to by the federal government. The second thing that intergovernmental lobbying organizations have influence over is when they can provide policy expertise and information that federal officials don't have. So there are a number of case studies out there, but for example, with the Help America Votes Act, which was passed after the debacle of the 2000 presidential election, what we saw was that state election officials had a lot of expertise because they were the people on the ground. What types of equipment did they need? How would you execute new elections? All these things were of great interest to federal officials because they didn't have the practical experience. So if you can provide policy expertise that people in the federal government don't have, that gives you a leg up as well. Now, it's important to recognize that this has to be unbiased information. Federal officials are very good at seeing through officials who talk about their own naked self-interest as well, as opposed to the importance of just what's unbiased information. Another thing is finding a pivotal voter in Congress, particularly on very big public policies. They may only pass by a couple votes either way. So for example, John Dinan, in talking about the passage of the Affordable Care Act, discusses the idea that there were a few prime individuals that were able to negotiate for Medicaid expansion, and as a consequence of that, they were able to help state and local governments get what they want. So if you can find a voter in Congress that supports you and they can use their leverage, that sometimes is a good source of influence for the intergovernmental lobby. And then finally, you can go public. So what we saw here, as we'll talk about quite a bit later on, is that public officials basically, some of them, particularly Democrats, were outraged by the effects that the state and local governments would feel from federal tax reform. And they made a very public issue of confronting the Trump administration. So these are the four ways in which the intergovernmental lobby has influence. Now, thinking back to this, these are all the groups that were actually involved in tax reform that are related to state and local governments. I only use those things that those groups that actually advocated during tax reform. So some people would, for example, provide information to their membership about tax reform, but didn't actually have a position on what their membership should take or ask for advocacy. So these are the groups that advocated for tax reform. In total, we have 57 groups were involved, just again, from state and local government perspective. We can divide these into two specific areas, what we call the generalist associations and what we would call the specialist associations. The generalist associations are those that are made up of people that are elected in some capacity. The specialist associations, on the other hand, are primarily organizations that are made up of people that are appointed, usually some sort of bureaucratic capacity, either at the state or the local government level. So we see 13 generalist associations. Most of these are fairly large organizations like the National Governors Association, National League of Cities, U.S. Conference of Mayors, etc. There are also kind of smaller organizations, such as the National Association of State Auditors, Controllers, and Treasurers, and also things like the National School Boards Association, National Sheriff's Association. In the Specialist Association, we see a very broad range of organizations that are involved here. And most of these organizations, if you take a look at them, are organizations that were concerned about interest-free municipal bonds. So a lot of these were people that were involved with infrastructure, so public power, public transportation, public works, public gas, large public housing authorities, public power, and education, and so forth. So we have a very big, broad diversity of organizations involved from the specialist associations. Now, when we take a look at the intergovernmental lobby and take a look at those people that are probably most effective in influencing public policy at the national level, we refer to these organizations as the quote-unquote Big Seven. So that includes state and local officials that are all elected in their capacities. So from the state level, we have the National Governors Association, National Conference of State Legislatures, Conference of State Governments. At the local level, we have the National Association of Counties, U.S. Conference of Mayors, National League of Cities, and then the Management Association. So all of these were very active in federal tax reform. And the biggest thing that you see here is that they focused on preserving the state and local tax deduction and also preserving the tax-exempt status of municipal bonds. Now, when we talk about SALT, what we mean is essentially that people, since the tax code was instituted with the passage of the 16th Amendment, people have been able to write off their state and local taxes in their federal taxes if they itemize. In other words, if you pay $5,000 worth of income taxes at your state level, you're able to write that off your income at the national level. If, for example, you paid $7,000 in property taxes to your local government or your local school district, you're allowed to write that off. Many economists view this as being an inefficient way of subsidizing state and local governments. And certainly Republicans, since way back in the 1980s, if not before, have focused in on eliminating this state and local tax deduction because they felt that it unfairly, or at least from their perspective, harmed low tax states by allowing more tax deductions from quote unquote blue states with high taxes. So as we went into this kind of round of tax reforms, what we saw was that Republicans right from the start wanted to eliminate this SALT deduction because they felt that it basically benefited Democratic states with high taxes at the expense of what they viewed as their own more efficient Republican states, which kept their taxes low. So right off the bat, this was a source of conflict. Overall, tax reform itself was conflictual for the state and local governments. You saw a great divide between Democrats at the state and local level and Republicans at the state and local level. Republicans were very interested in tax reform because they felt that it could help economic growth. Plus, Republicans supported the Republican president and President Trump. On the other hand, Democrats were very much opposed not only to just President Trump in general, but the idea that you would cut the tax code and redistribute wealth towards the upper incomes, as well as cut business taxes. So just from a general political perspective, the idea of tax reform as it was kind of carried out by the Republicans and President Trump was a partisan debate, with Democrats at the state and local level opposing it, and most, although not all, most Republicans supporting it. So where do we have some consensus here? One was that in general, all these organizations focused around preserving the state and local tax, or SALT deduction. They made the argument that since 1916, with the passage of the 16th Amendment, we had always allowed state governments to be able to write off people to write off their state and local taxes, and that this was historical precedent that shouldn't be overturned. Second of all, the idea of basically preserving tax-exempt bonds was very popular among state and local governments. These included municipal bonds. So when people would, for example, buy, let's say, the city of Philadelphia wanted to, build, some types of infrastructure and need to borrow money, they would put out bonds. People would buy those bonds, A, because Philadelphia is relatively stable and it's a government, but B, because they could, there was no interest on their returns from those bonds. There was actually kind of an incentive to be able to buy these bonds. So in general, people saved money because the interest on the bonds wasn't taxed. And state and local governments liked this because from their capacity, they made the argument that having these bonds be tax exempt essentially allowed them to borrow money much more cheaply, upwards of 1% less than they would if they eliminated the tax exempt bonds. Now, there are other issues, and I'll let you read the article to understand this, but there are a bunch of specialized policy domains which only some of the groups were involved in, but nonetheless show us the great effects that public policy has on just various things at the state and local level that we wouldn't otherwise think too much about. So, for example, educational groups were very much concerned that with this $1.46 trillion worth of tax cuts, that would lead to deficit reduction. And in education, this isn't something that we think very often about, but one of the ways the Republicans were talking about paying for the tax cut was to reduce Medicaid. But about $4 billion a year goes into the educational system for people with disabilities and special education to help them at the local level with education. And teachers were concerned that this would cut back on programs related to special education. They were also concerned in the educational field, and again, being teachers and teachers' unions, they were interested in preserving public education. They were worried Republicans in Congress would somehow alter the tax code to give incentives for people to subsidize, going to private schools as opposed to public schools. And then finally, teachers had received a $250 tax credit. Many of them have to buy their own school supplies, and teachers were concerned that that would be zeroed out in an effort to be able to come up with the money to pay for the tax reform. There's a couple other things here. For example, community development. some very effective targeted programs like the low-income housing tax credit, historic tax credits for historic districts, and creation of new kind of what they call the new market tax credit, which is an effort to be able to create new kind of enterprise zones. And then another kind of policy domain that this hit in specifically was in the field of transportation. Many people, it's been a long time since we raised the gas tax in the United States, and the Highway Trust Fund is not flush with cash. And many in the transportation field used this as kind of an opportunity to push for more gas taxes, which did not happen. And other people were concerned that they might get rid of tax incentives for public transit. So we have kind of these really big, broad issues that state and local government officials were involved in, both conflictual, like the idea of tax reform itself, and then consensual, like the state and local tax deduction, as well as tax-exempt bonds. But below that, there were a lot of little tiny areas in which people were involved in specific to their own policy domains and interests. One of the ways that organizations work is that they try to form coalitions. So these are the coalitions that were active during the course of tax reform. And what you'll oftentimes see is that smaller organizations will get involved in these advocacy coalitions because it allows them to best leverage their power. So they'll kind of come together. Say, for example, Americans Against Double Taxation. You'll see some of the larger organizations, some of the smaller organizations, and they'll get together. So, for example, the GFOA, the Government Finance Officers Association, provided all the background research for why retaining the SALT deduction was a good idea. And then all the other kind of groups fall in line behind them. So there were a number of different things here. Again, SALT deduction, municipal bonds, low-income housing tax credit, historic tax credit, timber industry tax provisions, and on down the line in education, public health, and energy efficiency, and transportation as well. So in looking at this, what we saw was the end of the game. Presenting a united front didn't always work. So in this instance, what we saw was that the state and local tax deduction was not exactly zeroed out of federal taxes, but at the end of the day, they were only, state and local government officials were only able to retain part of the state and local tax deduction. So here's where we kind of find those pivotal voters in Congress. There were a number of Republicans that were from big blue states with high taxes, including states like New York and California, who were very fearful of a backlash of the complete elimination of the SALT deduction within their states. And they were actually able to force their fellow Republicans in Congress to allow some form of the SALT deduction to remain in place. So, for example, what we had in the final tax bill was that you could deduct up to $10,000 of your state and local taxes in the final tax bill. So a couple of those pivotal voters that were Republicans that needed every vote that they possibly could, particularly in the House of Representatives, were able to force some sort of a compromise. And then we saw that there was a lot of going public here, particularly among Democratic governors and Democratic mayors who overall opposed tax reform, and they were very vocal, including the governor of California and also the governor of New York at the time. Providing policy expertise and information worked on one hand, but not the other. It worked with tax-exempt bonds, but not with the state and local tax deduction. And here's the reason why. John Nugent argues that there's a principle of universality. You're most effective in trying to influence Congress when there is some tax provision that affects everybody in the United States. If it only affects certain types of people, it's very difficult for state and local governments to be able to convince members of Congress that their interests are important. So, for example, with the state and local tax deduction, that primarily hurt Democratic states with high taxes, and it helped taxpayers in so-called red states or Republican states with lower taxes. So there wasn't universality there. In other words, Republicans could just kind of shake their heads or shrug their shoulders and say, well, it's going to hurt people that didn't vote for me anyway. On the other hand, every state and local government uses tax-exempt bonds to help to fund infrastructure. So that principle of universality applies there. It affects every single state and local government. And as a consequence of that, state and local officials were able to go to their members of Congress and say, look, us having these tax-exempt bonds allows us to pour billions of dollars into infrastructure development every year. At the present time, the federal government isn't doing anything to help us. So this is the only way that we can really build infrastructure. Take it away from us, and you're going to have less infrastructure. And that really kind of caught on with members of Congress who bought into this and preserved those tax-exempt bonds. So, what we have in addition to those kind of, presenting a united front is this concept of universality here. If it affects everybody, then Congress is much more likely to listen. And that was certainly the case here as we took a look at tax reform. Now, what happened after this? Basically kind of a postscript to this article, which was more or less completed back in December of 2018, is that from the perspective of tax conformity, what we've found is that it didn't turn out to be as radical of a problem for state and local governments as it was first thought. Most states were able to make adjustments, and as we went in 2019, there really wasn't any problem. One of the good things for state and local governments, particularly state governments, is it appears as though because the federal government deleted a lot of different types of specialized tax cuts, that actually raised taxes in many states inadvertently, and state tax revenues have actually increased. So states have actually benefited from more revenue. The SALT, what we've seen is that, a number of blue states have challenged the SALT, the more or less elimination of the SALT deduction through lawsuits, saying that they were specifically targeted at Democratic states, and as a consequence of that are illegal. And then some states, New Jersey being one of them, actually came up with what are known as a SALT workaround. So let's just say that you owed $7,000 in property taxes. Basically, what those states tried to do was set up nonprofit organizations where you could donate that $7,000 worth of property taxes to a school district as a donation, so that you could write it off as a donation instead of a tax. And that was kind of a workaround. Basically, the lid was shut on that, and the IRS and Treasury Department issued regulations basically saying that that it's completely obvious what you're trying to do here, and it's illegal. So that didn't work. As far as any attempt to be able to roll back the partial elimination of the SALT tax deduction, it's fairly unlikely at this point. One is that the Republicans are fairly satisfied with the effects of tax cuts, so they're not really willing to kind of fiddle with anything at this point. The partial elimination of the SALT was what really paid the most into paying for the tax cuts. So Republicans don't want to fool with that. And the second thing, and this is kind of interesting from the perspective of the Democratic presidential campaigns, is that for the most part, the SALT deduction really helped wealthy people, those people who could itemize. And most people, since the standard deduction has been increased to $24,000 for couples and $12,000 for individuals, most people don't get beyond the standard deduction. So reinstituting the state and local tax deduction would really be what would be called a tax expenditure for the wealthy. And it's very difficult then, even though this disproportionately affects democratic states, it's very difficult for Democrats to make the argument that this should be eliminated from the tax code. And then finally, we have yet to see kind of the long-term effects of what tax reform has on deficit politics. The fear from state and local governments is that as the federal government runs, deficits over $1 trillion in the near term, that will require, attempts to be able to cut the federal budget, which will have dramatic effects on the state and local government transfers between, the federal government and state and local governments. So overall, titled this "Trying Not to Lose Ground," state and local governments benefited in some ways by keeping overall kind of the tax-exempt municipal bonds, but from the perspective of some states, lost out because of the partial elimination of the SALT deduction.